Welcome to Markets Now. I'm Michelle Rook along with Steve Freed with ADM Investor Services, and we're in the midday time period. We're seeing just about everything lower except for cattle futures, and grains have already traded two-sided on the row crop side of things. But with this lower bias that we're seeing today, Steve, we're past the WASDE report. What are we trading today?
I think that there was, some hope that, the USDA might lower South American crop, especially Argentina, and that would give a bump in at least the soybean market. I think that the market was also looking for maybe a lower Argentina corn crop. And with the resurgence of fighting and the possible increase in fighting in Ukraine, the question was, number one, how much more grain can be shipped out of Ukraine with the corridor deal due to expire in mid-March, and just how much corn they can plant. The wheat was kind of all over the place in that the numbers really didn't change that much.
No.
We're still dry in the southern plains, and you've got Argentina, you've got Ukraine crops down, while Russia, Canada, and Australia crops are up. And so it felt like this 670 area nearby March corn is kind of a point in which is the midpoint of a potential narrow range for the next couple of months. 750 wheat is found hopefully some support, but more importantly, we're trading Kansas City almost at $9 because of the weather. Mm-hmm. And I think that the meal market is probably the one showing the most upside risk because of what's happening in Argentina with them, the number one exporter in the world. So I think that USDA numbers were right in line with what people thought, but people that bought the market up to 1530 on the March are just worried about less supply out of Argentina.
So as far as soybean meal, we went up, made new contract highs, got above the $500 mark, couldn't stay up there. But is what's going on with Argentina and the continued dryness that they're seeing, is that enough to get the soybean meal market back up at that level? Is that what it's going to take to keep soybeans above this $15 marker? What do we need?
Well, our December crush was less than expected. And so, the question is now, are we going to be crushing for oil? With some of these new plants coming on and seeing a kind of resurgence in palm oil prices, with Indonesia maybe slowing exports, or are we going to crush for meal? And again, I think the crushers have good ownership of the beans versus not very good ownership as far as corn is concerned. But if you look at the chart formation and you want to go back to the good old days when charts mattered, we're almost got a head and shoulders forming up that might send us back to 450, then making us new highs over 500. So the managed funds are not excited about the grain markets, okay, assuming that demand is down and supply is going to be up in 2023. It's just, we have to make this transition going from a tight supply in 2022 to, a bearish demand market in 2023. So, I think farmers in general, they should have all their old crop beans sold at these price levels. Corn, they can trickle it in at these price levels. I think some of them feel that there's a chance that we could break out above the 688 area in March if demand picks up and we had good export sales this week. But they just don't want to sell, 1360 new crop beans. They'd like for it to at least go back up to the 1425 area, just like in the corn. They don't want to sell anything below $6,
right?
Even though it's going to be difficult for us to rally above $6 unless there's a weather problem.
Yeah, and that weather problem coming either in the U.S. or would a crop problem with getting this second crop Safrinha Brazil corn planted be enough of a boost?
Like I said, the export sales were good this week. I think you need to see more of that.
More of that. Okay.
I think that the safrinha crop will get planted, and I think that you're looking at a record crop, and so they're out of the market until first half July. So I don't know if we're going to trade that. I think the Chinese, within the next few years, want to get all they need, beans and corn from Brazil. And so they may be a little bit worried. We continue to watch the March corn open interest, and it continues to be high. And so the last time China bought corn, they owned the March and took delivery. So there's somebody in there that is long as a hedge against higher prices. And so we'll just kind of see how that plays out. But it is supportive for the corn market. So I think that in the U.S., weakening La Niñas are usually good for crop yields. The only time our guy missed a forecast was in 88 and 2012 when it didn't rain this summer. And so April's kind of a key month. If it's warm and dry, we may have a dry summer. If it's wet and cool, we'll have a normal summer.
Okay. And you talked about, the wheat market, Kansas City not able to sustain a rally over $9 or close above that mark. So what is it going to take there? Is that going to be a weather play? Is Ukraine the wild card? What is that?
Well, Russia still has 100 million tons of wheat that they sell to buyers below U.S. prices. U.S. hard red winter wheat export prices are the highest in the world. So, you're kind of sitting here almost with a price that for Kansas City that has rallied from a low back in January of $8, and here we are at $9. It's tough to move it any higher unless we were to somehow see the Russians have some kind of hiccup and then go from there. But I just think that in general, we're kind of stuck here between 8 and 9, and we'll just see what the April weather is. Kansas farmers would rather have an inch of rain in April than an inch of rain in February.
Yeah, and we haven't had that great of exports or demand on the wheat side. This morning's export report certainly bore that out. The other thing that's difficult is right now you've got a lot of, outside market factors like we always talk about, and the outside markets are pretty volatile right now, aren't they?
Yeah, I think that, when everyone wakes up in the morning in the old days and looked at cash basis and weather and things like that. But now we look at the dollar, and the dollar has been steadily declining since its peak back in September of 2022. It may have made a bottom the 1st of February, but it just doesn't seem like it can claw upside because every day, the feds are talking about increasing rates, but then the economists said we don't need to, that we've already peaked in inflation. And, if you keep focusing on increased rates, you put us in a recession. Crude oil market has been sideways since October. We're at the lower end of the range. You just wonder how much we can sustain $72 crude, but every time we get close to 80, it just seems like it falls off because of concern about demand.
Right.
And then the copper market, has always been the market that has given us the best indication of the Chinese economy. And we've rallied from the lows back in October. We got up to some highs here in January, and now we're backing off because of the U.S. and China relations. What if they don't take our beans? What if they don't take base or precious metals? What if they don't take energy with their current economy improving, but maybe not getting to the point where they can see increased demand?
Yeah. So today we're seeing a little bit of continued pressure in the cattle market here, or we did early on. Now we're back to the plus side. Hogs are lower. That's been kind of the scenario here. Tight supplies continuing to support the cattle. The increasing supplies weighing on the hogs. Is that kind of where we're destined to see these markets trade for a while?
I think so. I think that some believe that maybe the hogs have bottomed out for a while and probably need to correct from an oversold situation. But long term, we still just don't have the demand for the hog supply, especially on the export side. And in the cattle market, I think down the road, you're going to see more competition for our exports. And I think you're going to see a point in which the cattle numbers will meet the demand numbers, and the cattle market will probably late in 2023 start reversing and going lower. So, it's a recommendation that people that are putting cattle on feed right now need to be doing some hedges in the summer months.
Okay. Thanks for joining us as always, Steve Freed with ADM Investor Services here on Markets Now.